You have worked your entire life. You have paid your taxes every single fortnight for 40 or 50 years. You have raised a family, paid off a mortgage, looked after aging parents, and finally, after all of that, you have settled into the quiet rhythm of retirement, with your age pension arriving like clockwork, and a small sense of peace that you have earned. And then suddenly, out of nowhere, a friend at the bowls club leans across the table and says, "Did you hear? Centrelink has a brand new computer system that can see everything in your bank account now. They are matching your data with the tax office, your super fund, even your bank transfers. People are getting letters. Pensions are being cut. Some are being cancelled completely." And your heart sinks, because if that is true, everything you planned just changed overnight. Stop, take a breath. Because what I'm about to share with you over the next 20-something minutes is not panic. It is the truth. We are going to walk through exactly what has changed in 2026, what has stayed exactly the same, what Services Australia and the Department of Social Services are quietly reviewing behind closed doors, and what every Australian over 60 needs to know to protect their pension this year. This is not clickbait. This is not speculation. This is the truth, straight from official sources, explained in plain English. Welcome to Centrelink Daily AU. Let's get into it. You have probably seen it everywhere. The Facebook groups full of frightened comments, the WhatsApp messages forwarded by a worried cousin, the news headlines screaming about Centrelink crackdown and pensioners under surveillance. Some of these posts are months old, recycled from years ago. Some are deliberately exaggerated to drive clicks, and some, to be fair, are based on a real change that has happened, but explained so poorly that it leaves seniors feeling watched, judged, and worried that one wrong transaction could cost them everything they have built. Let's deal with this head on, because you deserve better than a panicked Facebook post. Yes, Centrelink and Services Australia have upgraded their data matching systems in 2026. Yes, the connections between Services Australia, the Australian Taxation Office, AUSTRAC, and the major banks are stronger and faster than they have ever been. Yes, a small number of pensioners have received review letters this year, but the picture being painted online is almost always misleading. Most of those letters are routine. Most of the data matching is automatic and harmless to honest pensioners. And most of the so-called crackdown stories ignore the very real protections that still exist for ordinary Australian retirees. So today, here on Centrelink Daily AU, we are going to separate fact from fear, line by line. We will look at the new system, the new dates, the new thresholds, the new risks, and the new opportunities. By the end of this video, you will not be worried. You will be informed. And being informed is the single best protection you have. Here is the confirmed fact, straight from official sources. From the 20th of March 2026, Services Australia officially expanded its automated data matching capability under existing legislation in the Social Security Act and the Privacy Act. This expansion was not secret. It was announced through public protocols on the Services Australia website and through technical bulletins issued by the Department of Social Services. The change allows near real-time exchange of certain financial data between Services Australia, the Australian Taxation Office, AUSTRAC, and a list of approved financial institutions including all the major banks and most super funds. Let me say that again, because it is the heart of this whole topic. Services Australia did not gain new legal powers in 2026. The law allowing data matching has existed for many years. What changed in 2026 is the speed and the breadth of the matching. The same information that used to take months to flow between agencies now flows in days, or in some cases hours. That is the real change, not new spying, not new surveillance, just faster, broader sharing of information that the law has always allowed. And here is something the Department of Social Services has confirmed in plain English on its own public guidelines. Data matching does not automatically reduce or cancel anyone's pension. It simply flags inconsistencies for a human officer to review. If your declared income and assets match the records the system can see, you will never hear a word about it. If there is a mismatch, you will receive a letter, and you will be given the chance to explain. That is the truth, repeated and verified straight from the official sources. Not a Facebook rumour, not a panicked headline. Now let's talk about what actually changed, because this is where the real story sits, buried beneath the panic. From the 20th of March 2026, 3 things genuinely shifted in the way Services Australia handles your information, and you deserve to understand each one. The first shift is the speed of bank data matching. Before 2026, most bank account information flowed to Services Australia through scheduled batch updates, sometimes monthly, sometimes quarterly. From March 2026 onward, certain transactions, particularly large deposits, large withdrawals, and unusual transfer patterns, can be flagged within days. This does not mean every coffee purchase is being watched. The system looks for specific triggers like large lump sums, unexplained foreign transfers, and major changes in your overall financial position. The second shift is the integration with the Australian Taxation Office and Superfund data. From the 1st of July 2026, the start of the new financial year, Superfund balance reporting became more standardised, with all major funds now sending quarterly snapshots to the ATO. Services Australia can request this data when reviewing your age pension entitlements. This matters most for retirees who have superannuation in pension phase, because once you reach age pension age, your super is fully counted in the assets test. The third shift, and this is the one most pensioners have not noticed, is the indexation date of the 20th of September 2026, when the next round of age pension thresholds is adjusted. The dates of these reviews are now better synchronised with the data matching cycle, which means changes to your reported income or assets are more likely to be assessed against the updated thresholds, not the old ones. This actually works in your favour, because the thresholds generally go up with indexation, not down. So the genuine 2026 change is not new powers. It is faster, smarter, better coordinated use of existing powers. And once you understand that, the fear loses most of its grip. Now I want to speak directly to you based on where you are right now in your retirement journey, because the impact of this change is very different depending on your age. If you are 60, 62, 65, or 67, your situation is not the same, and you should not be lumped into one frightening narrative. If you are 60 right now, you are still 7 years away from age pension age. You have plenty of time to organise your records, plan your super contributions, and prepare for a clean, simple pension application when the time comes. Data matching has almost no effect on you today because you are not yet claiming any payment. Your job is to stay informed and keep your financial records tidy. If you are between 62 and 65, you are entering the most important planning window of your retirement. This is the period where decisions you make about super withdrawals, downsizing, gifts to family, and investments will all directly shape your eventual age pension entitlement. Data matching matters here, not because it can hurt you, but because it can highlight inconsistencies later if you are not careful with documentation. If you are 67 or older and already receiving the age pension, you are in the group where data matching has the most immediate effect, but also where it offers the most protection if you do things properly. Provided you have reported your income and assets accurately, you have nothing to fear from a faster system. And remember, under the Social Security Act, you have 14 days to report any change in your financial situation. As long as you stay within that window, you remain fully compliant. This is exactly the kind of reassurance that Centrelink Daily AU exists to deliver, because the truth is far gentler than the headlines suggest. Now let me give you the positive surprise that almost nobody talks about, because the same upgraded data matching system that everyone is panicking over actually carries real benefits for honest pensioners. The first benefit is faster processing of legitimate changes. If your income drops because a part-time job ends or your share portfolio loses value, the new system can update your records and increase your pension faster than ever before. Pensioners who would once have waited weeks for an adjustment are now seeing updates within days. The second benefit is fewer paper-based reviews. Because Services Australia can now verify many of your details automatically, the number of full paper-based reviews has actually decreased for ordinary pensioners with stable, simple finances. That means fewer forms, fewer letters, and fewer stressful office visits. The third benefit, and this is the one I want you to remember, is the protection it offers against identity fraud and undeclared joint accounts. If someone else attempts to use your details, or if a deceased estate is being mismanaged, the new system catches these issues far earlier, often before any real harm is done. And there is one more quiet good news story tucked inside the 2026 changes. From the 1st of July 2026, Services Australia expanded the use of its free official Financial Information Service, or FIS, which now offers more virtual appointments, more after-hours phone slots, and clearer plain English guidance documents. This service has always been free. It has always been independent of any sales pressure, and in 2026, it has been made easier to access than ever before. You can book a Financial Information Service appointment by calling Services Australia or through your MyGov account, and a qualified officer will walk you through your situation in detail, with no obligation. That is the side of the story you will rarely see in a Facebook post. Let's talk numbers, because nothing settles nerves like real figures. From the 20th of March 2026, the maximum age pension for a single person is $1,200.90 per fortnight, which works out to approximately $31,223 per year. For a couple, each partner receives $905.20 per fortnight, giving a combined household total of $1,810.40 per fortnight, or approximately $47,071 per year. These amounts include the basic pension, the pension supplement, and the energy supplement. Now let's look at the thresholds, because this is where data matching genuinely interacts with your pension. The assets test for a single homeowner allows full pension for assets up to $321,500, with the part pension cutting out at approximately $722,000. For a homeowning couple, the full pension threshold sits at $481,500 combined, with the cutoff near $1,085,000. Non-homeowners enjoy higher thresholds in both cases. For the income test, the free area is $218 per fortnight for a single pensioner and $380 per fortnight for a couple combined. Every dollar of assessable income above that free area reduces your pension by 50 cents. The deeming rates, which apply to your financial assets regardless of what they actually earn, are 1.25% on the first $64,200 for a single pensioner, or $106,200 combined for a couple, and 3.25% on amounts above those thresholds. And finally, the work bonus continues to allow eligible age pension recipients to earn up to $300 per fortnight from employment or self-employment without reducing their pension, with unused amounts banking up to a maximum of $11,800 over time. Every single one of these figures is on the Services Australia website. Every single one of them is real, verifiable, and current as of 2026. And every single one of them is the foundation on which the data matching system makes its assessments. Knowing them gives you power. Now let's go deeper into eligibility, because this is where many seniors get tangled up. To receive the age pension, you must meet 4 core requirements, you must have reached age pension age, which is currently 67 for everyone born after the 1st of January 1957. You must meet the residency requirements, which generally mean 10 years of Australian residence in total, with at least 5 of those years being continuous. You must satisfy the income test, which assesses all assessable income including deemed financial assets and work earnings. And you must satisfy the assets test, which counts almost everything you own, except your principal home, your everyday personal belongings at second-hand value, and a small number of exempt items. The principal home exemption is one of the most important protections you have. Your family home is not counted in the assets test, no matter how much it is worth. That is why selling your home, downsizing or converting it into cash needs to be planned carefully, because the moment those proceeds sit in a bank account, they become fully assessable. Services Australia does allow a temporary 2-year exemption if you are using the sale proceeds to buy another home, but only under specific conditions. For couples, both partners are assessed together, even if only one of them is claiming. That means your partner's income, assets, and super all matter to your pension, even if your partner is younger than you. This is one of the most common areas where the data matching system catches inconsistencies, because some couples accidentally underreport their partner's super or share portfolio. Eligibility is not a one-time decision either. Centrelink reviews your circumstances on an ongoing basis, and any change in your financial position should be reported within 14 days. That is the rule, that is the standard, and in 2026, with faster matching staying on top of that 14-day rule has never been more important. Now here is the trap to avoid, because this single mistake is costing Australian retirees thousands of dollars every year. The biggest mistake pensioners make in 2026 is not deliberately hiding money. It is forgetting to update Services Australia when something small but meaningful changes. A new bank account opened to take advantage of a better interest rate, a small inheritance from a relative overseas, a modest gift to a grandchild for a wedding or a house deposit, a change in the value of a share portfolio, a new part-time job paying a few $100s a fortnight. Each of these things, on their own, might seem too small to bother reporting. But the new data matching system sees them often within days, and a quiet inconsistency between your declared situation and the records held by your bank, your super fund, or the ATO is exactly the trigger that turns into a review letter. The review itself is not the disaster. The disaster is the backdated debt that can result when the discrepancy has been sitting unreported for months. Pensioners have been hit with debts of $2,000, $5,000, even $10,000 in some cases, simply because they did not realise the small change mattered. The fix is simple. When in doubt, log into MyGov and update your details, or call Services Australia on the 1300 number listed on its website. There is no penalty for over-reporting. There can be a real cost to under-reporting. Let me clarify something that confuses thousands of Australians, because this single area causes more anxiety than almost any other. The difference between data matching and a formal Centrelink review is not always understood. Data matching is automated. It is a behind-the-scenes process that quietly compares numbers between agencies. Most of the time, nothing happens. A formal review, on the other hand, is a human-led examination of your file, usually triggered by a significant flag or by a routine schedule. And while we are clarifying things, remember that Centrelink, Services Australia and MyGov are not 3 separate organisations. Services Australia is the federal agency that delivers Centrelink, Medicare and child support payments. Centrelink is the brand name for the income support arm of Services Australia. MyGov is simply the secure online portal that connects you to all your government services. The data matching system is run by Services Australia under the authority of the Department of Social Services. When you understand that structure, the system feels much less mysterious. Now let's pull back and look at the big picture, because none of this is happening in a vacuum. Australia is undergoing one of the most significant demographic shifts in its history. By 2026, more than 1 in 6 Australians is aged 65 or older, and that proportion is expected to keep rising for at least another 2 decades. We are living longer than any generation before us, with average life expectancy now well into the 80s, and many Australians spending 25 or even 30 years in retirement. At the same time, the ratio of working Australians to retired Australians is shrinking, which puts pressure on the federal budget that funds the age pension. The government is not trying to take pensions away from honest retirees. It is trying to make sure that every dollar reaches the people who genuinely qualify. That is the real reason behind the upgraded data matching system. Not surveillance, not suspicion, just accuracy in a system that supports more than 2.5 million pensioners across Australia. Understanding that context matters because it reframes the whole story. You are not being targeted. You are part of one of the most generous retirement income systems in the developed world. And the small effort of staying compliant is the price of keeping it sustainable. So what should you actually do this week to protect your pension and your peace of mind? The first thing is to log into your MyGov account and check that Services Australia has your most up-to-date contact details, including your current address, phone number, and email. So many review letters go unanswered simply because they were sent to an old address. The next step is to review the income and assets currently listed against your Centrelink record. Compare them to your most recent bank statements, super statements, and any share or investment summaries. If anything is out of date or inaccurate, update it through MyGov today, not next month. After that, write down every significant financial change you have experienced in the past 12 months. New bank accounts, gifts to family, lump sum withdrawals, inheritance amounts, even sales of items like cars or caravans. If any of those changes have not been reported to Services Australia, ring the official Centrelink line listed on the Services Australia website and update them now. There is no penalty for late but honest reporting, but there can be a real cost for ignoring it. Then, if your situation is complex, book a free financial information service appointment through MyGov or by phoning Services Australia. These officers are independent, qualified and free. If your situation is very complex, especially involving large super balances, trusts or property, also speak with a licensed financial advisor who understands Centrelink rules. And finally, share what you have learned today with another senior in your life, because the people most at risk of being caught out are the ones who do not know the rules even exist. Knowledge passed between friends is some of the strongest protection there is. If this video helped you cut through the confusion today, please hit the like button right now. It genuinely helps more Australians find this information when they need it most. Subscribe to Centrelink Daily AU and hit the bell so you never miss a daily update on the age pension, Centrelink rule changes or any government payment that affects Australian seniors. And drop your question in the comments below, whether it is about data matching letters, asset reporting, the 14-day rule, or anything else. We read every single comment, and your question could become our next full video. Share this video with another Aussie senior who needs to know this, because the more informed we are, the harder it becomes for any of us to be caught off guard. Until the next video, stay informed, stay prepared, and remember, your retirement deserves to be built on facts, not fear. From all of us at Centrelink Daily AU, take care and we'll see you tomorrow.